Hi all. So today we are going to discuss 7.3 reporting requirements under Companies Act, report versus certificate, contents of the report and qualification in the report. So all these aspects we are going to discuss today. 7.3 page number 38. Okay, I am using the revised version issued by the Institute Institute website, that is supplementary paper 12 June 2020. Okay, I am using the revised version issued by the Institute website. Okay, I am using the material that is supplementary paper 12 June 2020 issued by the Institute. Okay, so page number 38, please all of you take the page number 38. So this topic in this section 7, actually all the topics are equally important. First chapter, that is provision relating to companies audit under the Companies Act, is little bit more important, and all other three topics is also very important. Cost and secretarial audit is also important, but that chapter is very less volume chapter. The topics are very less in that chapter. There are majorly two topics, one is cost and another one cost audit, and another one is secretarial audit. So this 7.3, you have a variety of topic, different type of topic is covered under the 7.3. so you can expect around 8 to 10 marks from the 7.3 also. So please give equal importance to the all the topic. Okay, so please all of you take the page number 38, 7.3, that is reporting requirements under Companies Act, report versus certificate, contents of the reports and qualification in the report. Okay, so under that I am going to read scope, basic elements and significance of audit report. So under that, concept and definition. While conducting every audit, auditor has to go through three phases. One is preliminary work for audit, conduct of actual audit, and conclusion of audit, which means submission of audit report. So what they are saying, when we are conducting the audit, it is divided into three steps. That is, one is preliminary work. What is this preliminary work? Planning, audit program, all these things are preliminary work. Audit engagement letter, planning, preparing audit program, audit working papers, permanent, temporary, all these things are initial stage of work. So this is preliminary work. Okay, then conduct of the audit, actual audit. Conduct of the actual audit means that is current working papers, audit notebook, and executing the audit, performing the procedures, performing the audit program, and identifying the observations, and also writing the draft report. All these things are related to conduct of actual audit. And finally, conclusion of audit is report writing, final report writing, that is opinion on the financial statement. Okay, that is the coverage. Come to the next page, page number 39. Therefore, audit report is called ultimate and final product of every audit. So you can remember all these things for 1 mark also. Okay, so a report is called as a ultimate and final product of every audit. Okay, so this is audit report. It is opinion after doing verification, vouching, verification, examination, and finally we are going to produce one thing, final product, that is audit report, that normally we have to mark it to shareholders. If it is a statutory audit means we have to submit that audit report to shareholders. If it is a statutory audit means. Come to the next topic, that is importance of audit report. So an audit report is the end product of the auditing and concluding part of the audit process. Audit report gives the auditor's opinion on the accounts and record of the company as examined by him. Audit report reflects the work done by the auditor. All these things are general point. Okay, audit report is an end product, final product. Audit report is done by the work done by the auditor. Audit report is basically opinion on the financial statement prepared by the company. All these things are general point. Okay, come to the next topic. come to the next topic. Next topic is basic elements of the audit report. Basic element of the audit report. Element means content. Audit report means what are the things will be available. How we have to write the audit report. If it is a statutory audit report, audit under the, that is audit under the Companies Act, section 139, then what is the content, how to prepare this report. Okay, so I am going to read all those points. This element we already discussed in previous classes, but anyhow I will repeat the point here. Basic elements of the audit report, content or element, features. So first thing is title. Any audit report, there should be name for that report, whether it is a statutory audit, whether it is an internal audit, or whether it is an stock audit, or whether it is a cost audit, whether it is a secretarial audit, what type of audit we are conducting. For that title, that is called title. Title is basically audit under which act we are doing. Audit under Companies Act, audit under section 139, or audit under section 148, or audit under section 204. 148 is cost audit, 204 is secretarial audit. Which audit we are doing, that is auditor's title. Okay, so what is given here? Title. The auditor's report should have been appropriate title, that is auditor report. It should be distinguished from the other reports. Example, reports of officers of the entity, board of directors, etc. Okay, which report we are preparing, for that title should be there. Then addressee. In case of statutory audit or audit under Companies Act, normally the addressee will be recipient. That is, recipient is shareholders and the management. Actually, shareholders and management is the normal recipient. Okay, it is if it is any other audit, we have to report to the management, that is board of directors. Okay, that is addressee. I'm not going to read inside, just I'm explaining. Okay, next point is opening or introductory paragraph. So whenever we are writing a report, first is title, second one is addressee, to whom this report we are going to submit. For their name and address, everything we have to write there. And the next thing is opening or introductory paragraph. So in this normally what is the thing is what is the responsibility of manager and what is the auditor's responsibility, that is discussed in the opening or introductory paragraph. What type of audit we are conducting, which period we are conducting, which period we are going to report, and what is the responsibility of manager and what is the responsibility of auditor. That basic information given under the opening or introductory paragraph. Why we are giving here? So that the reader or the user should understand what is the responsibility of management and what is the responsibility of auditor before getting into the further detailed report. Okay, before that they should understand what is the job of auditor and what is the responsibility of auditor and what is the responsibility of management. Based on that only this report is prepared. Okay, so ultimate responsibility for maintaining control in the company is management only, not auditors. They have to implement the controls. You refer our internal control topic, you will understand. So what I am trying to say is, we will go through here. Opening or introductory paragraph. The auditor report should identify the financial statement of the entity that have been audited, including the date and period covered by financial statement. So in this area we have to mention which period we have covered, which period we have conducted the auditor, whether financial year 2019-20 or whether financial year 2020-21 or whether financial 17-18 or whether financial year 18-19, which year we covered the audit, that we have to cover. Come to the next page number 40. So under the page number 40, I am reading the first paragraph. The report should include a statement and financial statement as the responsibility of the entity management. A statement and responsibility of the auditor is to express opinion on the financial statement based on the audit. So that's what I said. It is a responsibility of management regarding the preparation of financial statement. Auditor will not prepare accounts. Auditor will audit the accounts and he will give the opinion on the financial statement prepared by the company. Okay, that is what here it is given as an introductory or opening paragraph. Come to the next heading, that is scope paragraph. What is the scope paragraph? Ultimate things done by the auditor. How auditor conducted his job. What all the things he performed. What all the guidelines he have taken for conducting this audit. For example, whether he is complied the accounting standard, whether he referred the accounting standard or not properly during conducting of audit, whether he referred the auditing standard or not during the progress of audit, or whether he referred all the Companies Act provisions while conducting the audit or not, whether he has applied the accounting principle properly while conducting the audit or not. All these things are scope paragraph. Okay, how we conducted the audit, what all the items he covered as an auditor, how we conducted the audit, and how we covered the various provisions, various rules and regulations, various accounting standards, all those things we will understand from here. Actually, the auditor report should describe the scope of the audit by stating that audit was conducted in accordance with the standards and on auditing and generally accepted in India. The auditor report should include a statement that the audit was planned and performed to obtain reasonable assurance whether financial statements are free of material statement. One more thing is, he has audited on the financial statement, and auditor also should mention that I collected sufficient evidence. Sufficient evidence means whatever the transaction entered by the company, whatever the financial statement prepared by the company is genuine for or not genuine. For that reason, I should have collected the sufficient evidence to prove myself or to inform my members properly. I have to collect the sufficient and appropriate audit evidence. Okay, and all these things are free from the material misstatement. Okay, for that I should have an evidence, then only I can say you are correct. Without evidence I cannot say someone is correct or wrong. Okay, that's what they are saying. Third para under the scope paragraph, the auditor's report should describe the audit as including examining on test basis evidence to support the amount as disclosed in the financial statement, assessing the accounting principles used in the preparation of financial statement, asserting significant estimates made by the management in the preparation of financial statement, evaluating overall position of the financial statement. While auditing, I checked the company's stand on the company, whether company is followed accounting principle or not. That I have to check as an auditor. Whether accounting assumption or assertion made by the company is correct or not, that I have to check as an auditor. Okay, overall basis I have to evaluate the financial statement prepared by the auditor. Then the next line, the report should include a statement by the auditor that audit provides a reasonable basis for his opinion. So based on this activity only I have to give the opinion. I cannot directly go to the opinion. Before opinion I have to apply all these steps. One is I have to follow the standards on auditing, another one is I have to follow the accounting standards, then other one is I have to test the company's internal control, then I have to test the company's application over the accounting policies, accounting principles, accounting standard, and company's assertion I have to test as an auditor, and I have to evaluate overall financial statement. Before giving the opinion I have to do all these steps, and I should get the sufficient evidence in my hand to give the opinion. If I say someone is good, I should have evidence. Without evidence I cannot say someone is good. And material, if there is no material misstatement, that I cannot say, because it is not acceptable. You should have any evidence and you have to write your report that this company is free from material misstatement. Okay, come to the next heading, that is opinion paragraph. This is final thing. Under the opinion paragraph, after doing the audit, that is scope of work, scope paragraph, then I am going to write based on my available evidence. Based on the available evidence with me, I have to write a report. Opinion means maybe this is, I can say this company is good, or this company is good but they are bad in one particular area. This company is totally bad company. If this company is good company, then that is called unqualified report, unqualified opinion. You can say unqualified opinion, plain report, clean report, like that you can say. If you don't have any problem, then it is an unqualified or clean report or plain report. Okay, if this company is good but they are not good at certain area, they are bad at certain area, then that report is called qualified report. Okay, this company is totally a bad company, they are not at all worth it, they are totally involved in major fraud, then that type of report is called adverse report. Sometimes auditor will say, I am not able to give any opinion because I don't have sufficient data, this company is not provided document to me properly, so I am not able to say whether this company is good or bad, because this company document is not available for audit purpose. Then I have to write a report called disclaimer of opinion. Disclaimer of opinion means document is not available, hence we are not unable to give our opinion on the financial statement. That is disclaimer of opinion. We will understand next pages, we will understand types of opinion and all. This is opinion paragraph. Then date of the report, I have to write the date of the report, which date I signed the report. That should be after the signature of board of directors. Accounts prepared and it should be signed by the board of directors. Then finally we have to assign as an auditor in account, in financial statement also we have to issue the audit report. Okay. Then place of signature, I have to write my name, address and everything. That is place of signature. Which place I am signing, means if the office is located in Chennai and I was not in India for past 6 months, then I have to write the place correctly, which place I am signing. Okay. Auditor signature also, while signature I have to mention name, my signature and also membership number, everything I have to mention. Then next to the audit signature you have something called note. That note is basically while preparing this audit report I have to follow SA 700. SA 700 is Standards on Auditing 700. That is basically forming an opinion and reporting on financial statement. For that forming, when I am forming some opinion and report on the financial statement, I have to follow SA 700. Come to the next page. Next page is significance of opening paragraph. Next page is significance of opening paragraph. That is importance of opening paragraph. As we discussed, opening paragraph is nothing but period which we are conducting the audit and the responsibility of management. What is the responsibility of management and what is the responsibility of auditor? Okay, that is what the significant importance of opening paragraph. I am just reading the points. The opening or introductory paragraph identify the financial statement of entity that it have been audited, including the date of and a period covered by the financial statement. So in this I am in opening paragraph I am mentioning the period I covering for this audit. Okay, issuing this audit report. Then the opening paragraph seeks to bring to the notice to the users of financial statement that preparation of the accounts is the responsibility of management and the enterprise, whereas the responsibility of the auditor is express an opinion on the said account based on the audit carried out by him. Thing is, opening paragraph I should mention that it is the responsibility of management to prepare the financial statement and it is only auditor responsibility to give opinion on the financial statement prepared by the management. Okay. And the next para continuation, through the opening paragraph the auditor communicates the basic method. The preparation of financial statement requires management to make significant accounting estimate and judgment as well as to determine appropriate accounting principle and method used in the preparation of the said financial statement. Thing is, auditor also write that responsibility of management is they have to prepare the financial statement. While preparing their financial statement, it is also the responsibility of management whether they have to follow the accounting principle, accounting standard and accounting assertion while preparing the financial statement. This is also responsibility of management. Okay, accounting principle means what? You know that personal expenditure should not be debited to revenue expenditure, and accounting standard A is to valuation of stock or cost or market price, whichever is lower only they have to apply. Like that many principles they have to follow while preparing the financial statement. As an auditor I have to inform to the shareholders and the members that what is the responsibility of management and what is the responsibility of an auditor before writing the opinion paragraph or significance of scope paragraph. Okay, I am reading the next continuation, that is significance of scope paragraph. The scope paragraph seeks to inform the users about the practices and procedures followed in the conduct of audit by the auditor. While conducting an audit, what are the things covered by an auditor? That is covered under the scope. How we conducted the audit. While conducting the audit, how we collected the evidence. For that evidence, what are the things he applied? What are the tests he applied? Okay, you got it or not? Like whether he has followed the accounting standard, whether he has followed the accounting principles, whether he has applied the rules and whether he has tested the samples properly or not, what are the samples he has taken for the audit. All these things are part of the scope paragraph. Okay, how he is giving the assurance, he should have a reasonable assurance over the financial statement that is based on the evidence collected by him during the performance of audit. Okay, this is the meaning for significance of scope paragraph. Then come to the unqualified opinion. These topics are little bit important. Types of opinions is little bit important. Unqualified opinion means that auditor is writing an opinion on the financial statement that their financial statement are reflecting true and fair view. Their financial statements are reflecting true and fair view. All the transactions entered are genuine and they have complied the accounting principles. This company is complied the accounting principles properly. This company is complied the accounting standards properly. That is unqualified opinion. Unqualified opinion means there is no qualification. Qualification means there is no remarks or there is no something negativity I am writing. Unqualified means there is no qualification in the report by the auditor. Okay, that is qualified report, qualified opinion. Unqualified opinion means this financial statement is prepared properly, genuinely, and they applied the accounting principles, accounting standard and other acts properly, and there is no material misstatement. There is no material misstatement in the financial statement prepared, and this financial statement reflects true and fair view. Based on our audit, this is the report. So unqualified opinion means no problem in the company. Financial statement is prepared by applying the generally accepted accounting principle practice and also standards on auditing. Everything is followed by the company properly. Okay, so this is the thing. So what is given here? An opinion is said to be unqualified when the auditor concludes that financial statement give a true and fair view in accordance with the financial reporting framework used for the preparation and preparation of financial statement, or the auditor gives a clean or unqualified report when he does not have any significant negative reservation in respect of matters contained in the financial statement. Unqualified opinion is the best audit report which company can expect. Thing is, auditor does not have any problem, and auditor is giving opinion that true and fair view is reflected in the financial statement. No framework used for preparation presentation of financial statement. Come to the next page. Page number 42. An unqualified opinion indicates the following thing. What are the things? The financial statement have been prepared using generally accepted accounting principles which have been consistently applied. This company followed the GAP, that is generally accepted accounting principles, properly. Okay, consistently they have applied all these things. Then the financial statement comply with the relevant statutory requirement regulation. This financial statement is complied all the rules and regulation, Companies Act, all other act, FEMA, FERA, all those act, GST act, income tax, all the act is properly covered by this financial statement. There is no mistake in the financial statement. Okay, and next thing is there is adequate disclosure of all material matters relevant to the proper presentation of financial information subject to statutory requirement wherever applicable. So this is the thing. Okay, come to the next one. So unqualified opinion means no problem, no material misstatement, free of material misstatement, there is no errors, and company followed the general accepted accounting principles properly, and they complied all the rules and regulations, statutory regulation properly, and this is what given as an unqualified opinion, and true and fair view is properly reflected in the financial statement. Okay, come to the next stating. Evidence. So while I am giving an unqualified opinion, as an auditor I am saying this company is good, there is no problem in this company. Okay, everything is perfect. How can I say like that? Without having evidence I can't say. When I am saying someone is good, I should have sufficient evidence about that company. How you are saying that this company is good? Then I should have an evidence, audit evidence. While performing my audit I would have collected many evidence, documentation, entries, agreements, bank statement, whatever the nature of evidence that I should keep with me, that I have to show to the management and the shareholders how I am saying this company is good company. That is evidence. Okay, I am reading that evidence. Reasonable evidence is obtained in support of transaction recorded in the books of account. Whatever the transaction recorded, for that there should be some reasonable evidence. Okay, then standards, again they are repeating the same thing. Accounts, while accountant is preparing the accounting statement, financial statement, he is complied all the accounting standard properly. True and fair view. Next thing is whatever the transaction entered is genuine and it reflects true and fair view. That is what? Classification. Classification is like whatever the entry made by the company's books of account. For example, purchase entry, sales entry, expenses entry, salary entry, depreciation entry. All the entries they classified correctly. Classified correctly means what? They should not wrongly classify the entries. Like salary entry, they cannot show it as a purchase entry. Purchase entry, they should not present as a salary entry because both are expenses. But if they wrongly present, then there is a material misstatement. Okay. So as an auditor, I have to check, even though they accounted all the entries, but whether it is correct or not, whether they classified the entries correctly or not. That is, purchase entry means they should book under the purchase books. Salary payment means they should book under the salaries entry. They should not interchange the head. Okay, that is classification. Then format, and also audit report is as per the format prescribed by the Institute of Chartered Accountant of India in case of financial audit. In case of statutory audit, I followed the format which is available, which is registered, which is recognized by the Institute of Chartered Accountant of India. Next thing is free of misstatement. As I said, the financial statement is prepared without any error and there is no material misstatement in the financial statement. That is the thing. Disclosure. Disclosure, this company is disclosed transparently all the information to the shareholders. There is no hiding the information in the company inside. They are not hiding the information. Okay. Come to the next thing. Next thing is modified audit report. What is this modified audit report? Unqualified report, modified audit report. Unqualified report means no problem, everything is correct, there is no material misstatement, everything. Then what about modified audit report? Modified audit report means generally if it is a statutory audit, there is a standard format available. There is a standard format available at the institute site itself, Institute of Chartered Accountant of India. You have a format for report writing for statutory audit. If I am modifying the report means I am changing something from the format. When I will change something from the format, I am going to insert or delete something from the format. Why I am going to insert or delete something from the format? Because I identified some issues in the company. So I am going to insert some problem or I am going to insert some facts. Okay, I am going to report something new about this company. That might be negative or that might be something else also. The point is modified audit report is nothing but I am modifying the report for the purpose of inclusion of some points, inclusion of some frauds or errors identified during the audit that I am going to report. That is modified audit report. Okay, I am going to read now. So when the auditor issues a report other than unqualified, this report is called said to be modified report as per SA 750. So modified audit report is basically which is not an unqualified report. Unqualified means what is the meaning? Just now we discussed. So the point is, then what is modified audit report? What are the types of modified audit report? With that we will go through now. First bullet point, we just go through the first bullet point. Matters that do not affect the auditor's opinion, with emphasis of matter paragraph. Second bullet point, matters that do affect the auditor's opinion, qualified opinion, disclaimer opinion, adverse opinion. Thing is, matters that do not affect the auditor's opinion. I am modified the audit report. That is the first point. Modified the audit report means I am including something into the report. Including means I am trying to put some point in the report. What point? Observations. Observations means I found something which is abnormal or which I want to convey to the management, deficiency, lack of control or any non-compliances which is serious or mildly serious or major issue, minor issue, all the things I have to highlight. Okay. Now the question is, modified audit report two types. One is I am putting one highlight that is emphasis of matter paragraph. That is first bullet point. I am highlighting one issue, but that does not having significant material misstatement. That does not having significant material misstatement, but I wanted to issue an awareness or I want to highlight some issue. Okay, I want to give awareness to the shareholders, or I want to highlight the issue. For that reason, that is categorized under first bullet point, that is matters that do not affect the auditor's opinion with the emphasis of matter paragraph. Thing is, opinion is not going to change. Same opinion, that is true and fair use reflected, no problem, no material misstatement, everything is complete. That is what I am going to report as an auditor. But along with that report, I am going to put one point also. Point means some highlight or some awareness to the shareholder. What type of awareness it is? When I will issue such type of awareness? When I will issue such type of emphasis of matter paragraph? We come to the next paragraph. Come to the next page. Emphasize matters that do not affect the auditor's unqualified opinion. Thing is, everything is fine, but I wanted to give some awareness, or I wanted to highlight this point as an issue. What are the points? Example they have given. Going concern not resolved. They prepared the financial statement correctly. They complied all the accounting principle. They complied all the accounting standard. Their transactions are genuine in nature, and we have a sufficient audit evidence also. Then what is the problem? This company's going concern problem is not resolved. What is the meaning? Company's major asset, company's major production, for production they have some plant and machinery that they have sold in the market. If without that plant and machinery they can't run the business properly. So I am questioning the going concern. I am questioning the going concern means I am questioning the life of the company. I am questioning the life of the future of the company. Without plant and machinery, how can you run the business? If you sold your plant and machinery itself, then how you generate production? How you manufacture goods? How you manufacture the output? So I am questioning the going concern. That is not my opinion. That is not my qualified opinion. But I am putting one point that this company's major asset is sold, but new asset is not yet purchased. That is the one of the example as emphasis matters that do not affect the auditor's unqualified opinion. I am saying everything is correct in this company. They are doing everything correct, but they sold the major asset. So I am questioning the going concern aspect. Okay, that is the point. Going concern not resolved. What is the meaning? The auditor should modify the audit report by adding a paragraph to highlight a material matter regarding a going concern problem where the going concern question is not resolved and adequate disclosure have been made in the financial statement. Because of plant and machinery is sold and the new plant and machinery is not purchased, I have to mention that in the report one additional point, without qualifying the report, without qualifying the opinion, without qualifying anything, just I am putting one awareness point in the report. That is an example. Going concern not resolved. Okay, going concern means what? We already discussed. Going concern means company is going to operate for n number of years. Company is not going to liquidate in near future. They are going to operate. That is the assumption, fundamental accounting assumption. One of the fundamental accounting assumption is going concern. Okay, what is the next one? Significant uncertainty. Significant uncertainty means sometimes due to technological development, and advancement of technology, the present technology which this company is using is not feasible in the market. And they may not be having significant certainty for this business. So that time also I will put one point. Even though financial statement is correct, true and fair use reflected, they followed all the accounting principles, there is a significant uncertainty for this business due to technological advancement. That is a matter of emphasis. Without qualifying the report, I will write this point as a awareness point or highlighting separately as an one issue. But financials are okay, there is no material misstatement. That is what? Significant uncertainty. Okay, multiple uncertainty. There are multiple different type of uncertainty. One is political pressure, one is technological advancement, one is natural disaster. Like that, there are multiple uncertainty. That also I can highlight as a point. Okay, this is the meaning of modified audit report. Example, you come to the example. They have given one example. I am reading that example. Without qualifying our opinion. Without qualifying our opinion means what? Without giving any negative remarks, without highlighting any major material misstatement, I am highlighting one point. That is the meaning. Okay. Without qualifying our report, we draw attention to note 10 of the schedule of the financial statement. The entity is defended in a lawsuit alleging infringement of certain patent rights and claiming royalties and punitive damages. The entity has filed a counter action and preliminary hearings and discovery proceedings on both actions are in progress. The ultimate outcome of the matter cannot be presently determined. No provision for any liability that may result has been made in the financial statement. This is called matter of emphasis, significant uncertainty. Company's financial statement is correct, but they have not made any provision for one legal case pending in the court. Legal case pending in the court. There is a case against this company for some asking some penalty, but the court decision not yet came. So this company does not made any provision for the liability or loss in the books of accounts. So there is a significant uncertainty. Multiple uncertainty is there in this case. Provision is not made. That point I have to highlight. Otherwise, opinion, there is no opinion. There is a positive opinion. Okay. This is the meaning. Okay. Come to the circumstances that may result in an unqualified opinion. Circumstances that may result in an unqualified opinion. What is the meaning? Unqualified opinion means what? Qualified opinion means what? Unqualified opinion means what? Unqualified opinion means everything is correct. No problem, no material misstatement. All the accounting principles followed, all the standards followed. We have a sufficient audit evidence for our opinion. All the things is proper. That is unqualified opinion. Then what about qualified opinion? That's what they are asking here. Okay? When I have to give other than unqualified opinion report. When I have to give other than unqualified opinion report. What are the types of other than unqualified opinion report? Other types of unqualified opinion report is disagreement with management, significant uncertainty, limitation of scope, all those things. Okay. So the point is, what is the question actually? I am just reading the question. Circumstances that may result in other than an unqualified opinion. That means when I will give other than an unqualified opinion report. Under that, first point is limitation of scope. When there is a limitation of scope, what is the meaning of limitation of scope? I don't have sufficient information to provide opinion. As an auditor, I don't have sufficient information to provide an unqualified opinion. What is the meaning? This company does not give information to me for audit. This company does not give the information to me for an audit, conducting the audit. So I am not able to give any opinion on the financial statement. Why? Because this company I am not able to audit because non-availability of information. That is limitation of scope. And the company is saying you should not audit on this area, we will not share the information. Then that is limitation of scope. In such a case, I am not able to form any type of opinion on this company. What I should do on such case? I have to give disclaimer of opinion. What is the disclaimer of opinion? That means I am not able to give any opinion because of non-availability of information and limitation of scope. That is the meaning of disclaimer of opinion. Come to the next page, page number 44. Come to page number 44. Disagreement with management. Sometimes I will not agree with management. Management will say, as per my workings, this is correct. As per my valuation of inventory, I will value cost or market price, whichever is higher. Whichever is higher is correct, or whichever is lower is correct. Whichever is lower is correct. But they are saying we will put only high value, not low value. Then I will disagree. As an auditor, I will not agree because you have not followed the accounting standard. Then I will disagree with management and I will put my point in my report. I will qualify the report. This valuation of stock is not as per accounting standard. Hence there is a material misstatement. So I am qualifying the report in the aspect of inventory. All other areas are okay, but this inventory valuation is wrong. That is qualifying. Disagreement with management. I am disagreeing and I am putting my point. I can put my point, or else that depends on the nature of disagreement actually. Okay. Adverse opinion also I can give, or qualified opinion, both. Adverse means totally I am saying this company is bad. This accounting statement, financial statement prepared by the company, assertion made by the company, accounting principles followed by the company totally wrong, and everything we are not believing, or they have not followed the process properly. They have not followed the policies, practices, standards, procedures, law, rules and regulations, assertions, assumptions, everything they made wrongly. Then that is coming under adverse report. Adverse means negative report. Totally this company is wrong. Then it is a negative report. Qualified report means subject to this area, all other area is good, or all other areas present reflecting the true and fair view on the financial statement. Okay, that is the meaning. So that's what disagreement with management and significant uncertainty. Significant uncertainty we know already. Significant uncertainty we need not to qualify normally. We can put under the emphasis paragraph. That is highlighting awareness paragraph we can put. Without qualifying the report, we can put under the emphasis paragraph. But in some case, if auditor wants to give opinion, he can give the opinion also. That is depends on this situation it will change. Scenario to scenario it will change. Okay. Come to the next heading, that is manner of qualification. Disclaimer. Whenever the auditor expresses an opinion other than unqualified, a clear description of the substantive reason should be included in the report. Unless impracticable, a quantification of the possible effect, individual and in aggregate on the finance should be mentioned in the auditor report. What he is trying to say? If you are qualifying something, say for example valuation of inventory, as per company's valuation it is 1 crore. You are saying our company's valuation is wrong. You are qualifying the report now. So how to qualify it? You have to write properly the reason, you have to write all the information related to the inventory. How you arrived the value? As per you, what is the value? As per you, the value is only 50 lakh. As per company, the value is 1 crore. Hence, there is an increase of 50 lakhs, inflated by the company 50 lakhs rupees. Like that, you have to quantify the amount also. Not only simply writing something in English, this company is bad, like that. You have to quantify, qualitative, wherever required, you have to present in a quantification manner. And you have to write the reason also properly. That is how you have to write the report. You should not leave the shareholder into the confusion. Okay. Come to the next heading. Next heading, you please come. Qualified opinion report. Qualified opinion report. Again, we are going to discuss the same thing. Qualified opinion means what? Auditor is having something in the report which is abnormal. Which is abnormal means he is identified some point on the companies. What is identified some point means he identified some observation which is having some material misstatement. Okay. So qualified opinion means generally the company is following all the policies, accounting policies perfectly, but they does not have a proper internal control in the company. Due to that, there will be a possibility of frauds, and there is a fraud also. Like that, you can mention one point as a qualified opinion. Or else this company's as I said initially, valuation of inventory, this company does not follow the accounting standard. AS 10 PPE, that is plant property equipment, they have not followed the AS 10 revised AS 10 properly. That is also a qualified opinion. Okay. So that does not mean this company's total financial statement is wrong. In that aspect it is wrong. All other aspect they have done it correctly, but this aspect they are wrong. They have not followed properly. They violated the rules and regulation. They have not adapted the accounting principles properly. That is qualified opinion. Qualifying means not totally rejecting the company's financial statement, not totally saying this company's financial statement assertion everything is wrong. Subject to this area, all other areas reflecting the true and fair view, but subject to the particular area there is some issue, there is some material misstatement. That is qualified opinion. Okay, I am reading now. A qualified audit report is one where an auditor gives an opinion on the truth and fairness of financial statement, subject to certain reservations. So I am reading now a qualified opinion report. Under that I am reading, a qualified audit report is one where an auditor gives an opinion on the truth and fairness on financial statement, subject to certain reservation. What is that reservation? Second para. The auditor reservation generally stated, subject to the above, we report that balance sheet shows true and fair view. Subject to the above point, above item or above nature of item, we report to the balance sheet that it represent true and fair view. Okay. Point is, subject to above means what? Subject to inventory valuation, subject to fixed asset valuation, or subject to classification of liability, subject to so and so thing, whatever the point, we report that the balance sheet and P&L and balance sheet represents true and fair view. Okay. So third para, the overall impact of all reservation or qualification taken together is not material enough to vitiate the overall true and fair view of the financial, but it is important that such matters should be brought to the attention of the shareholder. Meaning that particular item is materially misstated, but that does not affect the overall financial statement presentation. Because of that error, material overall financial statement is not what you can say. Because of that particular material misstatement, the overall financial statement yet to be presented under the true and fair view. There is no negative impact for the overall financial statement. Overall financial statement, all other items, sales, purchase, expenses, asset, lot of item will be there. Apart from inventory, all other items are correct. Because of that, there is no overall impact on the financial statement, but there is an impact on the inventory, there is an impact on the stock item, there is an impact on the closing stock item. Like that, we have to report. That is called subject to. Okay, subject to that particular item, my P&L and balance sheet reflects true and fair view. Okay, that is the meaning of qualified opinion. Qualifying means qualifying the report for a particular area only. All other area represent true and fair view, subject to above area. Above area may be any area. Okay. Come to the next page, page number 45. Features of qualified report. I am reading the features of a qualified report. So okay, I am going to report a qualified opinion. Then how to report that? I should not simply write they did not follow the accounting standard, so I am qualifying. It is not the correct way. I have to report it properly with clarity. Clarity means what is the nature of issue, what is the nature of item, what is the amount that is not reflected as per the principles, as per the accounting standard. Okay, all those things with the clarity I have to write. Okay, that is the features of qualified report. What is the thing? First is clarity. The auditor must express the nature of qualification in clear and unambiguous manner. Why? If I say something is wrong, I have to write a proper manner. Next thing, explanation. Where the auditor answers any of the statutory affirmation in the negative or with the qualification, his report shall state the reasons of such answer. I have to give explanation also to the shareholders. Placement. where I have to present this point, that also important. Okay, auditor report, all qualifications should be contained in the auditor report. There only I have to place this point. Okay, where I have to present subject to, I have to mention subject to. Why I am mentioning subject to? Because this is the only area I am facing the problem. All other area is okay. That is why I am saying subject to this area, all other area is okay. All other area is presented true and fair view. Nature of qualification, what type of point, what type of issue it is, that also. If it is a violation of law, I have to mention the violation of law. They have not complied with the GST Act. They have not charged GST on the product. That is a violation of law. GST is applicable to them, but they have not charged the GST on the bill. They have not charged the GST on the bill. That is a violation of law. Okay, you have to charge the GST and you have to collect from the customer. If you have not charged the GST, then there is a violation of law. As an auditor, I have to point out that. Quantification. Next thing is quantification. What is the amount? How much amount is violated? How much GST is not charged? How much GST is not charged in the bill? That is violation of law. That quantification means valuation or amount I have to present. Okay. Come to the next page. Draft report. The auditor may discuss matter of qualification with the management to acquire their views. It is not necessary that the auditor should accept the management view and modify his opinions. Modify his opinion, but it would enable the auditor to accurately draft the qualification in his final report. Draft report means I have written some report. I have written some qualification. I should, before circulate to the shareholder, I have to share that to a report with the management. Sir, this is my report. This is what I am qualified. Do you agreed or not? Even if management is not agreed, we are not agreed. They are saying we are correct. You are only wrong. Then auditor should change the report, or they need not to change the report. They need not to change the report. If auditor is confident on on his view or on his observation, he can present the report to the shareholder. But before circulating, he has to share the draft report for their concurrence also. Okay, for their understanding also. Aspects to be considered in a qualifying a report. When I will qualify the report? Normally, how I will qualify the report? Aspects to be considered in a qualifying a report. How I will qualify the report? What are the things I have to cover? Examine whether auditors are in active disagreement with something which has been done by the company, or they are merely unable to form an opinion for lack of adequate information about an item. First question is, auditor is totally disagreed with the management. Then only he can qualify the report. As I said, A is 2. Company is saying one thing, but auditor is saying one thing. But as per auditor thing only correct, because he is following the accounting standard correctly. But company is not following the accounting standard. Okay, then there is a need for a qualification. In such a case, there is a need for a qualification. But this is the scenario. Company is not giving the information at all for audit. Then can I qualify the report? I should not qualify the report, because I don't know what is there actually. I don't know what happened in the company. In such case, what I should do? I have to write a report, disclaimer of opinion, meaning I am not able to form an opinion because data is not available for audit. They have not shared the information to me. Then I should provide a disclaimer of opinion, not qualified opinion. Okay, qualified of opinion is something they shared with you, but you have not agreed. You had a disagreement with the management. That is the meaning. Okay, illustration, you please go through all this illustration. You may expect 1 mark also. Qualified report illustrations. You come to next page please, 47. All this illustration you go through, you will understand. Okay, all these things are scenario. This scenario I have to qualify the report. All these scenarios I have to qualify the report. Okay, disclaimer of opinion. Come to the 47 page number, disclaimer of opinion. What is disclaimer of opinion? Just now I discussed. If I am not able to get the information from the company is not sharing the information with me, then I have to write a report that is a disclaimer of opinion, meaning I am not able to form the opinion at all, because Information is not available for the audit. That is the meaning. Okay. Many reason information may not be available due to some reason, because there is a fire in the office. Because of that, all the books are destroyed already. So I am not able to form the opinion. So I will put a disclaimer of opinion. Or else there is an income tax department who seized the books of accounts from the company's registered office due to the income tax issue. So as an auditor, I am not able to form my opinion because books of accounts is not available with the company. Okay, such case I will form a disclaimer of opinion. Come to the next page. You please go through yourself about the theory, whatever based on my discussion. You please go through all those English. You will understand. The point is very important. Opinion things are very important, so don't ignore. You go through the words mentioned there. Okay. So next thing is piecemeal opinion. What is this piecemeal opinion? What is this piecemeal opinion? I am reading the first para under the piecemeal opinion. The auditor may in some cases find that the financial statement he has examined present only a partial true and fair view. In such cases, he may report that he is unable to express an opinion limited to certain items in the statement which he is satisfied. Such a situation would warrant a piecemeal opinion. As the name says, the auditor gives a divided opinion on the matter which he is satisfied and which he is not. The auditor should say the reason for having a given a piecemeal opinion. Piecemeal opinion in the sense, scenario like you say, out of 100 items in the balance sheet and P&L account, auditor is satisfied with the 80 items. Auditor is satisfied with the 80 items in the P&L and balance sheet. So he is giving piecemeal opinion. Piecemeal opinion means that 80 out of 100 items, 80 items represent true and fair view. Out of 100 items, 80 items represent the true and fair view in the financial statement. But balance 20 item, I am not able to give my opinion because document is not available. Information is not available for audit. For balance 20 items, information is not available for audit. So I am not able to give my opinion on the balance 20 items. Okay. Balance sheet P&L, you have many items: purchase, sales, expenses. Balance sheet, you have lot of assets, liabilities. Out of all these many items, for out of 100 items, 80 items only I am able to form the opinion on the financial statement. That is called piecemeal opinion. Partly true and fair view, and balance disclaimer of opinion. Balance you are not able to form the opinion at all. Okay, that is piecemeal opinion. What is the next one? Adverse or negative report. Adverse or negative report or adverse or negative opinion. What is the meaning? You are saying this company's total financial statement itself, I am not agreeing. I have a disagreement with this total trial balance sheet, financial statement, everything, notes on accounts. I decide because they have not at all followed the accounting standard. They have not at all followed the generally accepted accounting principle. They have violated the Companies Act. They have not followed the accounting standard, Ind AS, everything. Okay. In such a case, I have to give an adverse report or negative report. Their assumption is totally not as per the principles, generally accepted accounting principles. They are debiting their personal expenditure to revenue expenditure. Okay, like that there are many violations they are doing in the company. So I am saying this total financial statement itself I am not agreeing. All the items I am not agreeing. Then in such case only I have to give the adverse or negative report. So what is the thing actually? An adverse or negative report is given when the auditor concluded based on his examination he does not agree with the affirmation made in the financial report. The auditor states that the financial statement does not present a true and fair view of the state of affairs and the working results of the organization. Auditor should state the reason for issuing such report. An adverse opinion should be expressed when the effect of a disagreement is so material and pervasive to the financial statement that the auditor concludes that the qualification of the report is not adequate to disclose the misleading or incomplete nature of the financial statement. What they are trying to say? Only qualification is not enough. I have to give adverse report, meaning total assumption made on the financial statement by the company is I am not agreeing, I am disagreeing. Then I have to give the negative report, adverse report. Okay. Next one. Some remarks which are not qualification. Some remarks which are not qualifications, meaning this is first point. Modified audit report divided into two categories. First category is emphasis paragraph, highlighting, giving awareness to the shareholder. This is not qualification, but this is remarks about this company. Okay, so what are the remarks? Just go through example they have given. Caro, they have not followed the Quaro for a certain area. That is one example. You please go through all these things. Come to the next page. Distinguish between explanatory note and qualificatory note. Explanatory note. What is this explanatory note? Explanation. Notes on accounts. What is the explanation? What is qualificatory notes? What is this notes on accounts? Generally, after preparation of financial statement, P&L account, balance sheet, cash flow statement, statement of changes in equity, after preparing all this financial statement, you have something called notes on accounts. That is also prepared by company employees only. How they prepared these accounts? For that they will give notes. For each and every item they will give notes. How they calculated the depreciation, how they valued the valuation of inventory, how they treated the foreign exchange fluctuation as per AS 11. Like that they will give lot of things on notes on accounts. That is explanatory notes. The notes which is accompanying the financial statement. What about qualificatory notes? That is a note prepared by the auditor on the financial statement prepared by the company. Qualificatory notes is prepared by the auditor on the qualification part. He is qualifying something. There is a material misstatement in the company. That is qualificatory notes. Okay, I am reading the explanatory notes and qualificatory notes. First point under the explanatory notes. An explanatory note is meant to explain or supplement a matter contained in related to financial statement. As I said, it's a notes on accounts. It is an explanation for your item appearing in the financial statement. Inventory, how it is valued, I will give an explanatory note. It is valued as per AS2, cost of market per whichever is lower. Fixed assets, how it is valued as per AS10. Revalued, how it is revalued as per AS10. Plant, property, equipment, PPE. Like that I will give explanation on the items available in the financial, below the financial statement I will give as a notes on account. That is explanatory notes. Now I am reading the qualificated notes side. A qualificated note is intended to communicate the auditor's reservation on the accounts. Auditor's point is expressed as a qualificated note. Auditor is saying, AS2 you have not applied as per AS2 properly. Valuation is not correct. LIFO is not allowed under the AS2. You are following the LIFO method. For arriving the valuation of stock, LIFO is not allowed. Only FIFO or weighted average is allowed. Why are you following the LIFO method? Then as a qualificated note I will put it. There is no consistency in the following the accounting policies. Depreciation, there is no consistency. 1 year you are following SLM, next year you are following WDV, third year you are following SLM, fourth year following WDV. Consistently you are not following the same accounting policy. That I will put it as a qualificatory note. Next, second point. The matter on which an explanatory note is given in one on which the auditor has not taken an adverse view. Yes, of course, it is a note prepared by the accountant, employee, director of the company, not by the auditor. There is no adverse view on the but the qualificated note means they will take some adverse view. Normally he will put some adverse point, material misstatement point. Like this you please go through balance 2 points. I will go to the next topic. Next topic, distinguish between qualified report and adverse report. Actually the answer is available in the next page. Answer is available in the next page 50. Here I think this tabular format is for limitations and auditor duties. Limitations versus auditor duties. That is actually the topic. They are wrongly mentioned as distinction between qualified report and adverse report. That is available in the next page. Okay, answer is available in the next page. This tabular format is for column is for actually limitation versus auditor's duty. this is the limitation, what auditors should do. That is the scenario. Situation, first situation, when the limitation of scope infringes the duties of the auditor for the under the statute. What is the meaning? As per the Companies Act, I have a power. What is the Companies Act power? Powers under the Companies Act. 144, section 142, 143. Section 143 deals with the powers, rights, duties of the Companies Act. Auditor. Correct? Under section 143. So what I should do? I have powers to inspect the books of accounts, verify the books of accounts. But company is saying you don't have any powers to verify the books of accounts. As an auditor, what I should do in such a case? In such case, what I should do as an auditor? I should resign from the company. I should resign from the company. I should not accept the appointment letter. I should not accept the engagement letter itself. In engagement letter, audit engagement letter, we already discussed. In engagement letter itself, the company is writing one point. You don't have any powers to inspect the books of accounts. Then as an auditor, I should not accept the engagement letter. Okay? Then what is the meaning? I am not an auditor for that company. That is the auditor's duty in such a case. First point, another first point I am reading. When the auditor believes that limitation in the terms of a proposed engagement is of such nature that he would need to issue a disclaimer of opinion, then auditor's duty. In such a case, what he has to do? First point is that what he is saying, while accepting the engagement of letter itself, auditors knows we are not going to get any document from this company. Okay. We are going to issue only disclaimer of opinion. Meaning, we are going to issue a report which we are going to say due to non-availability of information, we are not unable to form any any opinion on this financial statement. Should I accept the engagement letter? Should I accept this appointment letter? No. As an auditor, initially itself I should avoid this company. I should say, if non-availability of information is there, then why you are appointing as an auditor? Why you are appointing me as an auditor? I will not accept the engagement letter. Okay, that is the stand auditor has to take. That is auditor duty. Second point, other limitation imposed by the entity or by circumstances. First point, when the terms of engagement says that the auditor will not carry out an audit procedure which he believes necessary, that is verification of investment. What is the thing? In engagement letter, there is one point where they are saying you should not verify the investment. As an auditor, what I should do? As an auditor, what I should do? Auditor duty. Auditor should carry out reasonable alternative audit procedure to obtain sufficient audit evidence to support an unqualified opinion. Okay, I am saying we are not eligible to verification of investment. I will try to verify this investment with any other alternative evidence. Not directly you are saying you are not giving the data, but that is the only point we are not going to audit. Means I will try to reverse work or something different to something, get the evidence indirectly to write the opinion. That is one way. That is what said there. Second point, when the timing of auditor's work is such that he is unable to observe the counting of physical inventory, he is not able to physically verify, then he has to do some workings. Opening balance, closing balance, sample basis he has taken something. He is tried to put some workings and he is tried to arrive the answer. Answer means valuation. If he is able to arrive, then he can provide the unqualified opinion. If he is not able to arrive the valuation of inventory, then he has to provide the disclaimer of opinion. Okay, what he has to say? This company does not allowed us to do the physical verification of inventory. Like that he has to write. So with this balance 2 points, you go through yourself. Please go through all the points. Okay, I am going to the next page. Next page is page number 50. That is qualified report, adverse report. Difference between qualified report, adverse report. Qualified opinion, adverse opinion. Qualified opinion means subject to above area, all other area reflects true and fair view. But case of adverse report, adverse opinion, this company's total financial statement itself does not reflect true and fair view. Their assertion on the financial statement, we are totally disagreeing. That is adverse report. Okay, affirmation made on the financial statement, I am not agreeing. Okay. Second point, auditor's reservation is generally stated as subject to the above. We report that subject to the above only we will write. But in case of adverse report, what we will write? The auditor says the financial statement does not provide true and fair view of the state of affairs and working results of the organization. I am saying total financial statement itself does not reflect true and fair view. Does not present a true and fair view. That is how I will write. Okay. Same point again and again. You have to think and write all this point. This chapter is not fully provision. This chapter is more logic, less provision. Okay. For this scenario, you have to think and you have to how to write the answer. That also you have to think. After our discussion, you can easily do that. If you go through our video discussion, you can easily write your own points on this. So next thing is difference between clean audit report and qualified audit report. What is clean audit report? What is clean, plain audit report? What is unqualified audit report? Unqualified, clean, plain, all these things are same. Meaning, I don't have any problem with this company. Meaning, their financial statement are reflecting true and fair view. They followed all the accounting standard. They followed all the accounting principle. Their affirmations, we are agreeing. Okay, they do not violated any provisions of the Companies Act. We collected the sufficient, reasonable, appropriate evidence also. Like this, all these points if I am having, then I can report a true and fair view report without any trouble. Okay, qualified audit report, again and again same thing. Okay, same thing. If you understood the above discussion, that is what is unqualified, what is qualified, what is negative, what is disclaimer of opinion, then you can easily write this difference between whatever it is. Okay, you please go through yourself. I am moving to the page number 51. I am moving to the page number 51. Date of the audit report. What is the date of the audit report? When I am signing the audit report, it should be normally after the auditor after the financial statements are signed by the company, or else it should be on the date of completion of my audit. I have to sign the report. On the date of completion of audit itself, I should sign the report. I should not wait for later 2 months. I should not wait for later 2 months. Why? Because if there is a change, anything in between these 2 months, it is not covered by the auditor. If there is a change in financial statement within these 2 months, that is not covered by the auditor. My audit report is based on the financial statement prepared on so and so date. On that so and so date only, I have to sign the financial statement as well as audit report. Okay. So whenever I am completing the audit report, on that date only I have to sign the audit report. I should not wait for the later date. As an auditor, I have to escape from my liability or this thing. How can I prove that I have completed my work properly? For that, you sign on the date you completed the audit. That will be better. So that the changes and modification, if anything, that you are not responsible. Correct? We will see here what is the thing. Date of the audit report. Since significant events may take place from the date of financial statement, date of completing audit field work, and date of audit report. The date of audit report should be the actual date of completion of audit. So what they are trying to say, after you are signing the report, thereafter itself there will be some rectification of error. Something will happen, significant material misstatement will happen, that we have to change the audited signed financial statement. So to avoid this scenario, when I am completing my audit, on the same date I have to sign the report, so that I can ensure that whatever I audited only signed, whatever is audited by me only I am signing, not for other changes. Okay, after my audit. Any point, next second para, any event coming to be known after the date of the audit report is not the responsibility of auditor, even though it may have a highly significant effect on the financial statement reported upon. That's what I am saying. If you change anything after auditor signature, then that is not a responsibility of auditor, because auditor is already signed the report on some financial statement which is already prepared. Now you are changing the financial statement, means that is not the responsibility of auditor. Okay. Like this, all the information is given. You please go through yourself. Come to the next thing. Narrow interpretation. What is narrow interpretation? Sometimes auditor will put one point in the report. How we will put? No, based on the information available, based on the information and explanation given by the company, we are believing on that and we are giving this opinion. That is narrow interpretation. Based on the information and explanation given by the company, we are believing and based on that we are giving our opinion. That is narrow interpretation. Then come to the next one, broad interpretation. Even though company is giving information and explanation, that information and explanation is verified in depth by the auditor and only we are giving the opinion on the financial statement. Two things. Simply I am taking the information and explanation and giving my opinion. That is narrow interpretation. Broad interpretation is he has given the information and explanation, but I have to perform my audit exercise to ensure that information and explanation given by the company is true and fair also. So it depends on the case and the scenario. I will, as an auditor, I have to take decision whether I have to believe the company on their information or else I have to test their explanation again. That is nature and scenario and situation that auditor has to decide. Okay, that is broad interpretation and narrow interpretation. You please go through the theory. Come to the next page. After reading the theory, you please run the video. After reading the theory, you please run the video. Don't jump into the next topic immediately. Okay. So next heading is, I am reading the page number 52. Under that, significance of obtaining information and explanation from the management. Why I am obtaining information and explanation from the management? Then only I can qualify. Then only I can unqualify. Correct? Then only I can form the opinion. Then only I can collect the evidence. Without explanation and this thing, how can I get the evidence? How can I form my opinion on the financial statement? That is significance, importance. Legal recognition. What is the legal recognition? Legal recognition is given to the process of obtaining information as part of the whole audit plan. The provision of the Companies Act in this regard are: first point, where any particulars of information is required to be given in the balance sheet or P&L account of a company or in any document to be annexed or attached, it shall be the duty of the concerned officer of the company to furnish without delay of the company and also the company's audit wherever is so those particulars that information is full manner as possible. One is legal recognition. One is, as per the Companies Act, it is the duty of the company to provide the information to auditor, and it is a responsibility of auditor to audit the information provided by the company. Okay, it is not simply I am blindly believing the management words, management information, whatever they are giving, I should not blindly believe. I have to audit on best of my knowledge. Come to the next heading. Management responsibility under auditors limitation. Management responsibility under auditors limitation. What is management responsibility? Generally, who is responsible for preparation of financial statement? Who is responsible for implementing the internal control? Who is responsible for adapting various accounting standard, accounting principles, generally accepted accounting policy, and who is responsible for complying the various rules and regulation? It is the management responsibility to follow various rules and regulation. It is the management responsibility to follow the accounting principle, accounting standard, generally accepted accounting principles. It is the management responsibility to form an assertion on the financial statement. It is the management responsibility to prepare the financial statement. It is the management responsibility to implement the internal control, not the auditor's responsibility. What is the auditor responsibility then? To comment, to form an opinion on the financial statement prepared by the company. Okay, that is an auditor responsibility. So I will just go through management responsibility now. Auditors cannot be expected to know all the technicality and complexity of the business deals. Further, the relevant properties and documents to explain the transaction may not be really available to the auditor, and even if they are available, they may still need to be explained so that one can clearly understand the impact of the transaction on the account. Management, which actually enters the transaction on behalf of the employee, is expected to have thoroughly understand the implication of all material transactions. Hence, auditors are empowered to obtain explanation from the management. What they are saying? Auditor does not have technical knowledge. He is having only accounts, finance, legal knowledge. He does not have technical. He is not a technical expert, right? So as a management has to explain how they arrived this input output ratio, how they arrived the purchase thing, how they arrived the losses, standard costing, what is the technical information behind all those workings. They should share these things with auditor. Then only auditor can form an opinion on the financial statement. Okay. Then come to the next heading, that is Auditor's Responsibility. Auditor's Responsibility. What is Auditor's Responsibility? Auditor Responsibility explanation is given by the management, but whether it is properly, they have followed all the things, policies, procedures, standards, auditing standards, whether they complied all the rules and regulations, whether they have an adequate internal control, and auditor responsibility to form an opinion on the financial statement after conducting an audit on test basis. Okay, that is what discussed here. Come to the next page, page number 53. On that first point is branch audit reports be considered by the statutory auditor. Branch audit means what? There will be a company having many branches, including abroad. Indian company is having branches in abroad. For that reason, branch auditor will be some other auditor. He is not a main auditor. Okay. In such a case, branch auditor will give branch audit report. That audit report is annexed. That audit report is considered for preparation of final audit report in India. Final audit report is prepared by statutory auditor, main auditor. So, what is the rights of the statutory auditor? He can ask lot of questions from the branch auditor. He can change the branch auditor report also. If he wants to change the report, he can change, because ultimate effect on the financial statement is arrived by the main auditor, not by the branch auditor. Okay, branch auditor will put some qualified report. Main auditor can remove that qualification if main auditor feels that there is no impact on the overall financial statement. Okay, so it is the rights of the main auditor, statutory auditor. That's what given here. I'll read that point. Forwarding of branch audit report, where the branch audit carried out by a person other than the statutory auditor, the branch auditor shall prepare a report on accounts of the branch office examined by him and forward the same to the company's auditor, who shall deal with the same in such manner as he considered necessary. Section 143, powers, duties, same powers and duties applicable also. Then qualification in branch audit report. As I said, if there is a qualification in branch audit report, statutory auditor, main auditor can include that qualification in his report, or he can ignore also. He can eliminate also, or he can modify that also based on the overall audit impact, based on the overall position of the audit. He can change, he can modify, or he can ignore the qualification raised by the branch auditor, because statutory auditor is going to be ultimate responsible for all the work done by the branch auditor. Okay. Point is, I am reading the point. If the branch auditor report contains any qualification, the statutory auditor should normally include in his own report, unless they are satisfied that either objection raised by the branch auditor have been met while preparing the company's accounts or during the conduct of the company's audit, or the matter on which qualification made is not material. It is not a material item. Branch audit report point is not a material item in the concept of company accounts as a whole. Okay. All these things you please go through. Next thing, scope of inquiry under section 143. Powers, as I said, powers, no. One of the power of auditor in previous class, section study note 7.1 we discussed already. One of the power is he can ask lot of questions from the management. All these points we discussed already in the powers and duties of the auditor under section 143, which is available in your study note 7.1 in our previous discussion. You please go through the previous videos. Okay, I'll go to the next page, 53, page number 54. I am reading the 54 now. Finally, report. I am going to give the report. In this report, as an auditor, what I should do, meaning While conducting an audit, how I conducted the audit, what are the things I have taken, on what basis I have conducted the audit, what guidance I have taken, meaning accounting standards, whether I followed the accounting standard, whether I followed the accounting principles, whether I have followed the standards on auditing, whether I checked the Companies Act properly. All the things I have to check whether this company is followed or not. That point I have to report it. You got it or not? All are general point. Whether I obtained all the explanation from the management or not for issuing the opinion on the financial statement. Like this, all are general point. You please go through yourself. The next one is CARO, Companies Auditor Report Auditor, CARO 2016. CARO 2016. As you know, statutory auditor means audit under Companies Act. For audit under Companies Act only, we are discussing all these points majorly. So what happens, auditor, if there is a point, if there is a qualification, he will report. If there is no qualification, then he will issue unqualified opinion, meaning everything is perfect. That is the general statutory audit report format. So government has introduced this CARO, Companies Auditor Report Order 2016. Before that, 2015, 14, 13, everything is there. Every year it is there. Even presently there is a CARO 2020, which is not yet to be applicable. Due to Corona, they postponed the applicability of CARO 2020 to the next financial year. That is not applicable to 1920 financial year. That is applicable to 2021 only. Okay. So the point is, what I am trying to say is, we are discussing about CARO 2016, that is applicable to you for examination purpose. You forgot about all other CARO. What I am trying to say is, as an auditor, if there is an issue, I will report it. As an auditor, if there is an issue, I will report it. If there is no issue, I will not report it anything. So what government thought about the audit report is, auditor, if there is an issue or not an issue, auditor should report certain points in his report mandatorily. Even though there is an issue or not an issue, he has to write no issue on this area. Meaning, government is trying to bring the responsibility on the auditors, more responsibility on the auditor, because auditor is not focusing on certain major areas. Auditor is ignoring certain areas. So we want to bring some responsibility and liability to auditors, so that we have to bring this CARO 2016. Because this CARO 2016 says that it gives some checklist actually. Checklist means items to be verified during audit. It's around 20 items, more than 20 items it gives. This areas you have to write in your report, whether it is correct. Everything is correct also, you have to write everything is correct. We verified it. Got it or not? Meaning, they are bringing some responsibility on the auditor. So meaning, if you are writing something and you are saying correct, if there is any problem in this area tomorrow, then you are liable. Okay, that is what they are trying actually. CARO 2016, before the content, you have to understand one more thing: for whom it is applicable, for whom it is not applicable. For whom it is applicable, for whom it is not applicable. Okay, I am directly reading the third para, that is one single line actually. The new auditor is applicable to every company except for whom it is not applicable. First point is banking company, banking industry, banks, it is not applicable. Insurance company, it is not applicable. A company licensed to operate under section 8. Under section 8 is basically NPO, non-profit organization registered under the Companies Act, like trust, NGO. If it is registered under the Companies Act, then they have to register under section 8 of those companies. CARO is not applicable. Then what else? One person company, only one director, only one shareholder, company. That is one person company, one member company. For them, CARO is not mandatory. Small companies definition, you please go through. For small companies, it is not applicable. Private limited company, not being a subsidiary or holding company of a public company, having a paid up capital and reserves of surplus not more than 1 crore rupee on the balance sheet date, which does not have total borrowing of 1 crore rupee from any banks and financial institution at any point. Next page I am reading. During the financial year and which does not have a total revenue disclosed in the schedule 3 exceeding rupees 10 crore. Meaning, first is banking, insurance, then section 8 company, then 1% company, small company and private company having paid up capital of less than 1 crore, having borrowings from the banks or financial institution less than 1 crore, having turnover of less than 10 crore. For them it is not, this CARO reporting is not applicable. What is CARO reporting? I am reporting a standard format. There is a statutory audit format, standard format is there. Along with the standard format I will attach this report as a CARO 2016 report. In that CARO 2016 report, there will be some more than 20 items where I have to definitely write, even though everything is pakka correct in the company, I have to report it. Okay? What are the checklist? What are the checklist actually? So, checklist is available. I am directly going to read the checklist. Point number A. Point number A I am going to read directly in the page number 56. What is the page number? 55. Page number is 55. Okay. 55. I am going to read the what are the area. CARO means company's auditor report. That CARO means this area should be reported in the audit report. What are the area? First point. Whether company is maintaining proper records showing full particular including quality details and situation of fixed assets. What they are trying to say? What they are trying to say? Fixed assets details in the company should have some proper breakup of the quantity, value, name, location. That is called fixed assets register. Okay, they are saying whether this company is having fixed asset register or not. As an auditor, I have to highlight. Even if they have, I have to say they are having. That is the speciality. Okay, that means auditor is not escaped from his responsibility. Auditor has to report all these points. Auditor has to check especially these points apart from his regular audit. Okay. Point number B. Whether fixed assets have been physically verified by the management at a reasonable interval. Second point. If they have a fixed asset register. Next question is whether they do physical verification of fixed assets regularly or not. If they are doing, I have to say they are doing. If they are not doing, I have to say they are not doing. In CARO report. Okay. Third point. Whether title deeds of immovable properties are held in the name of the company, if not, provide the details thereof. Third point. Whether the ownership of the company, ownership of the fixed assets. Who is the owner of the fixed assets? Got it or not? Who is the owner of all these fixed assets? That I have to mention. For that, what I have to say? Title deeds of immovable property. Land, building. Who is the owner? Where is the title deeds? That I have to check. If it is not available, I have to inform. If the ownership is in different name, I have to inform. Point number D. Whether physical verification of inventory is conducted reasonably in intervals. Whether they are doing physical verification of stock or not. Stock audit. Whether they are doing stock audit properly or not. That I have to check. If they are doing, I have to say they are doing. If they are not doing, then I have to say they are not doing. Okay. Then point number point number E. Whether company has granted any loan, secured, unsecured to companies, intercompany loans, intercorporate loan under section 189. Okay, you will have in Companies Act, Group on Companies Act you will have. Whether this company has given any loan to the other companies, intercompany loans, related parties. If there is a loan, whether they complete the act properly or not. That I have to check as an auditor. There is a limit. You can't give loan as per your wish. There is a limit on the intercompany loans. Point number F. Whether terms and conditions of grant of such loans are not prejudicial to the company's interest. They gave the loan, but whether is there any fraud or whether anything against in the interest of the shareholder. They misused the powers by granting the loan. As an auditor, I have to check. Point number G. Whether schedule of repayment of principal and payment of interest has been stipulated and whether the repayments or receipts are irregular. Whether that fellow, we have given loan to somebody, no, whether that somebody is repaying the amount correctly to the company or not, whether there is a repayment schedule is there or not. Okay. Point number H, if the amount is overdue, state the total amount overdue for more than 90 days and whether reasonable steps are taken by the company for recovery of the principal and interest. Next thing is, I have given the loan to another company. If it is delay, if it is due for more than 90 days, then I have to, this company has taken sufficient measures for recovery from that fellow or not. That is thing I have to ask. Point number I, again intercorporate loans, guarantees, whether they have followed the 185 section 186 complied properly or not. Now come to the next page, page number 56. Point number J, if in case the company, point number J, in case the company has accepted deposits, whether the directives issued by RBI and provisions of the section 73 to 76 or any other provisions of the Companies Act 2000 and the rules framed thereunder where applicable have been complied with. If this company is accepting deposits from the public, they are accepting the deposits, public money means section 73 to 76 deals with the company deposits, acceptance things, whether they complied these rules properly or not. Okay, that is the question I have to ask. If they complied, I have to say yes. If they don't complete, I have to put a point on this. Point number K, whether maintenance of cost record and cost audit is applicable to this company or not. As an auditor, I have to question maintenance of cost record and the applicability of cost audit is applicable. If you maintenance of cost record is applicable, then have you maintained the cost record or not? That also I have to ask in the CARO report. What is the next one? Whether the company is regular in depositing undisputed statutory dues, including provident fund, employee state insurance, income tax, all the legal dues. This company is depositing sales tax, GST they are paying, insurance, ESI, PF, income tax, all the things they are depositing to the government properly or not. If anything is outstanding more than 6 months, then I have to report that. If anything is more than 6 months, then I have to indicate that actually. Okay. Point number M. Point number M is also related to taxation statutory dues. If there is any case against the company, dispute against the company, that also I have to disclose with the amount of dispute also. Point number N, whether the company has defaulted in repayment of loan or borrowings to the financial instrument, bank, government or dues to debenture holders. If yes, the period and amount of default. If the company is not repaying the loans properly, then they have to mention how it is defaulted, how much is the value, what period they have defaulted. Point number O, whether money raised by way of IPO or FPO and term loans were applied for the purpose of the for which those are raised. Whenever you are issuing IPO or FPO or raising loan, you have to write the purpose. You have to write why you are raising the loan, why you are raising the money, what purpose you are raising. Whether as an auditor, I have to check whether you used the money for the said purpose or not, or any other purpose you used. As an auditor, I have to check. Point number P, whether any fraud by the company or not, that also I have to check. So like this, you please go through all the points. Even you can expect some short notes. CARO, you can have to write point, or even you can expect short notes also, or you can expect 1 mark also. Okay. Now I am in next page. Next page is 57. In 57, I am going to read the Auditor's Report on Revised Accounts. Auditor's Report on Revised Accounts of Companies before circulation to shareholders. Auditor's Report on Revised Accounts of Companies before circulation to shareholders. Normally what will happen, after the completion of financial year, auditor will do the audit. Before auditor is doing the audit, company has to prepare the financial statement for the completed financial year. The company will prepare the financial statement, company will prepare the notes on accounts. Thereafter auditor will do the audit on the financial statement. Thereafter auditor will prepare the audit report. Audit report is prepared. Thereafter AGM is conducted, annual general meeting. In AGM, audited financial statement and audited report is submitted to the shareholder. This is the process. So first preparation of financial statement,
then audit of financial statement, then audit issuing audit report, then conducting AGM. This is the process. So what you are saying, what is the headline here? Auditors report on revised accounts of companies before circulation to shareholder. What happens? Companies prepare the financial statement. Company prepared the financial statement, correct? Auditor audited the financial statement and issued the audit report. Later on, it is went to AGM. So what happens? Sometimes companies prepare the financial statement. Auditor is audited the financial statement. But before submitting to the shareholder, there is an error or correction required in the financial statement. Okay, got it understood or not? Company is saying to auditor, sir, we did some mistake. We want to correct the financial statement. So we are going to revise the books of accounts. We are going to revise the notes on accounts. Then as an auditor, I have to ensure this point is also included in the audit report. This point is also included in the notes on accounts. I have to inform to the members or shareholders this point also. Initially we certified, we signed the report, we gave the opinion, but company has changed the financial statement, hence we are also revising our audit report. All those points should be included in the financial statement and audit report also. Okay, it is possible because this is not circulated to shareholder. Shareholder is the ultimate recipient of the user of the financial statement and audit report. Before circulation itself, they find out the mistake and they rectified the mistake, and this mistake also, revision also should be included in the financial statement. Why it is revised? What is the purpose? Changes occurring after the balance sheet date. Changes occurring after the preparation of financial statement. Okay. So I am reading under that headline, first para. There may be instances where the management of company amend its audited accounts and approves its and then requires the statutory to make a report once again on the amended accounts. The auditor duty in this regard as enumerated below. That's what they are saying. There will be scenario where they will amend the accounts and they will request the auditor to issue the audit report again. First thing is written. Ensure that all the copies of original accounts and report are returned to the auditor. Whatever initially signed and given to the management as an audit report should be returned to the auditor first. But that is the first thing. Disclosure. Then second thing, ensure that the fact of revision of accounts already approved by the board and reported upon by the statutory auditor appears as a specific note on the amended accounts. If there is a revision, that should be included in the notes on accounts. Yes, we revised the accounts due to this reason. That also should be informed to the shareholders. Okay. Reporting requirements. Adequate disclosure. If the statutory auditor is satisfied that disclosure made by the company in the notes on accounts is adequate, there is no further need for the auditor to refer the revision of balance sheet and the P&L in his report. What he is trying to say? Company itself adequately given in the notes of accounts. Why they revised the accounts? Means then auditor need not to revise the audit report. Accounts is different from audit report. Financial statement is different from audit report. Financial statement is prepared by company. For that, auditor is signing audited financial statement. Auditor will issue one report, audit report. What they are trying to say, if the financial statement is properly reflected the revision, then audit report not required to change. If there is no need to change, then they need not to change the audit report again, because disclosure is made sufficiently in the financial statement itself. Why the revision? It is sufficiently explained in the financial statement itself. That is called adequate disclosure. Then what about inadequate disclosure? What about inadequate disclosure? They have revised something without properly informing the members, without properly informing the shareholder. They simply changed the figures. Why they changed, how they changed, what they changed. Nothing has informed in the accounts, notes to accounts by the management. Then as an auditor, it is a responsibility of an auditor to include this point in his report. Due to this reason, they have changed the accounts. That is inadequate disclosure. That is inadequate disclosure. In such a case, auditor has to revise his report. Next para, the above principle is also applicable to government companies also. Government auditor also has to follow these things. Come to the next page. What is the next page number? Page number 58. Come to the page number 58. What is the page number 18? revision rectification of financial statement. Revision rectification of financial statement. What is this revision rectification of financial statement? We will understand again. Qualified report, where past accounts have been reopened and revised on technical grounds, and company has asked the auditor to give his report under section 143 and revised account, he should issue a qualified report only. Format: the report should indicate the company has reopened the accounts contrary to the opinion of the ICAA. The relevant paragraph of the report may appear as under. The point is, now it is already circulated to the shareholder. Now it is already circulated to the shareholder. Okay, meaning audited accounts is already circulated to the shareholder. Audited financial statement is already circulated to the shareholder. After the circulation of shareholder, they want to revise the. So the point is, as per the Institute of Chartered Accountant of India, as per their opinion, once the audited financial statement is circulated to the members, shareholder, you should not revise again, because it is already circulated to everyone. How can you change again the financial statement? You conducted the AGM, but you want to change the financial statement again. How it is possible? That is the stand of ICAA. But the stand of Companies Act, Companies MCA, they said if it is a material misstatement, if there is an error, apparent error in the financial statement, then they can revise the financial statement. Even after circulation of shareholder also, they can revise the financial statement, and it should be signed by the auditor again. That is the stand of MCA. Okay. So they have to give the report accordingly once if it is changed. Means as per ICAA Institute, once the audited financial statement is circulated to members, you can't change. But as per MCA, Minister of Corporate Affairs, Companies Act, you can change the financial statement if it is an apparent error in the financial statement. Like for example, income tax rate is 30%, but they wrongly calculated as 15%. 15%, 30 instead of 30%, they calculate as 15%. Okay, that is the thing actually. So next one is revision of the audit report. Revision of the audit report. So I am reading the revision of the audit report. Revision of financial statement. The auditor should issue a fresh report on the revision financial statement according to the guidance note on audit report on revised accounts of a companies before circulation to shareholder, and guidance on a note on revision rectification of financial statement. Thing is, one is if it is before circulation to shareholder, previously we studied before circulation to shareholder, if there is any change in the financial statement, as an auditor, if it is not adequately disclosed, then as an auditor we have to issue an revised report. Revision of audit report. Situation, I am going to read the below point. Revision of audit report. Situation, revision of audit report is when it is required. Under that I am going to read. When the auditor considers that amendment in financial limit is not warranted, or when the auditor advises amendment to financial but management does not intend to revise the same. Thing is, when the auditor is going to revise his audit report, is not the change is not accepted by auditor, or the financial statement is not changed by the company. In both the cases, auditor has to revise his audit report, not financial statement. Financial statement, auditor does not have any control. Audit report only has to include his point actually. Second para. When the management agrees for revision in the financial statement but is unable to do so despite its bona fide intent, but management extends its cooperation to the auditor and agrees to ensure that anyone in receipt of the previously issued financial together with the audit report, there is an informed situation would be issued the revised audit report. Management is saying we are unable to revise the financial statement, so you please include this point in the audit report itself. Okay, that time I will include in the audit report instead of the financial statement. Auditor duty. In the above situation, the auditor should issue a revised report in which should refer the yearly report and state the reason for revising the report. Timing. For corporate entities, the audit report may be revised till the accounts are adopted at the AGM. For entities which adoption is not required, the auditor may consider revising the audit report within a reasonable time, but in any case not less than issuing the audit report for the immediate succeeding accounting period. What they are saying, any time before circulation of shareholder you can revise the report, because ultimate recipient user is shareholder. If a report is not reached to shareholder, you can change. If it is materially required, genuinely it is required, you can change the report. That is the stand of the ICAA. Okay, come to the next page, page number 15. Come to the page number 59. So I am in page number 59. You please go through rest of the points. I will be reading audit of abridged financial statement. 59. Abridged financial statement is basically not an full financial statement, not an full details contained financial statement. Abridged financial statement in the sense it is like glimpse or a glimpse of the particular thing. Actually, what you can say, it does not contain detailed information. It does not contain the detailed information. What is the detailed information? Detailed information means all the information, like expenses means detailed breakup I have to give. What type of expenses in the financial statement? Purchase means how many type of purchase. I have to give the detailed information in the working notes. Okay, but abridged financial statement is like summary. We don't give the full information in the financial statement. Okay, so normally this type of listed companies every quarterly they have to give the audited financial statement. Okay, that is you can say limited review. For listed companies they have to give the quarterly results, limited review. In that case they will give only the major item, sales minus expenses equal to profit, like that they will give. They will not give the detailed information, what type of expenses, what is the nature. They don't give present the total note financial statement. Simply they will give the abridged data for the purpose of a limited review. So how to audit these things? All these things, general points you go through. Okay, but that is the meaning. Opinion is there, then if it is unqualified opinion you give unqualified. If it is a qualified opinion and abridged, then you give the qualified opinion. You know what is the meaning for qualified opinion, you know what is the meaning of unqualified opinion. Come to the next one, provision for proposed dividend. Proposed dividend provision when is required actually? If auditor is, if the management is announced dividend, then company has to make some provision for proposed dividend. As an auditor I have to check. Normally your dividend should be paid within certain day from the date of declaration, right? So as an auditor I have to check whether this company is announced any dividend, interim dividend or final dividend. If it is announced, whether it is properly provided in the books of account or not, whether there is an appropriation of dividend in the books of accounts or not. As an auditor I have to check as an auditor. Okay, next heading, accounts of liquidators report under section 348 of the Companies Act. If the company is in winding up stage, then I have to close the books of accounts. Then I have to identify the liabilities, I have to identify the assets, realizable value, okay, repayment capacity. For that I have to prepare an accounts, I have to prepare an audit report to settle my creditors, to settle my vendors, to settle my lenders. If anything is left out after doing all these things, I have to share with my shareholders, accounts for liquidation. Correct? For that as an auditor I have to do an audit. Okay, I have to prepare an accounts, liquidation accounts. Okay, all the points are general, you go through yourself. Come to the next thing, section 182, page number 60. I am reading section 182. What is this section 182? Making payment to political group, making contribution to political group, incurring expenditure on behalf of the political group, directly or indirectly. All these things are covered under section 182. Okay, what is this section 182? Political, anything related to contribution to political party. So first point under that, board should pass a resolution authorizing such contribution. If I want to make a political contribution, board should have an resolution, first pass a resolution. Come to the next page, page number 61. The aggregate amount of contributed financially should not exceed 5% of the average net profit during 3 immediately preceding financial year. One more purpose you remember, maximum limit of political contribution. It should not be more than 5% of the net profit on average of the past 3 financial year. I have to take the past 3 years average of the net profit into 5% is the maximum eligible contribution for the year. That much amount only I can make. If my average profit is 100 into 5%, 5 rupees only I can pay as a contribution. Payments covered under political contribution. What are the items covered under the political contribution? True or false? Also you can expect from this area. Contribution made directly to a political party, whether in cash or in either other form. Cash are you paying, bank are you paying, or you are giving some facility, or you are incurring transport expenditure or any other expenditure, directly, indirectly. You are booking boarding and lodging expenses for political parties. That is also political contribution. You are spending expenditure for pamphlets, advertisements. All these things are political contribution. All those things are explained here actually. Directly, indirectly, in any form. Directly you are paying, or due by indirectly you are paying. You are giving to one, that fellow is giving to political fellow. So all this scenario is given here. Okay, you please go through for 1 mark purpose and even for short note purpose. If you are that's whatever I said is there. Extra things is also here. You please go through. Okay. Manner of the disbursement of amount. All the manner is given here. One is, I said, brochures, transportation expenditure, and what else? Cash. In cash, if you are paying, that also direct contribution, and you are giving to a trust which is run by the political party. You got it or not? Trust, association, society, any manner, if the political party is directly or indirectly interested and they are using your money, means that is political contribution. Okay. Come to the next page. Auditor's duty. Auditor's duty on political contribution. That is auditor's duty. Auditor's duty means, as an auditor, what I should do? I have to check first net profit average 5% exceeded or not. 3 years average profit on that 5% exceeded or not. As an auditor, I have to check, and I have to check all these things directly, indirectly, how much expenditure is incurred, public, how much in cashly, how much by cash it is paid, how much for transportation expenditure, how much for boarding and lodging expenditure, how much for advertisement expenditure, how much is contributed to trust, whether there is a board resolution is there or not in this regard. Okay. All these things as an auditor I have to check. Is there any unauthorized political contribution is there, excess political contribution is there or not? As an auditor I have to check. Next, audit of consolidated financial statement. Audit of consolidated finance. What is consolidated financial statement? Consolidation means what? Adding or grouping the financial statement. What is that financial statement? There will be in a company there will be many structure: holding company, subsidiary company, co-subsidiary company, associate company, joint venture. This many relationship between the companies. Normally companies, holding company means what? Under the Tata group you have many companies, but as a financial statement for a Tata group I have to prepare. That is consolidated financial statement. Consolidated financial statement means I am combining all the company's financial statement and I am presenting as a single company financial statement under the holding company's name. Under the holding company's name, I have to prepare one financial statement. For that reason, I have to add all the companies, all the subsidiary companies' financials, all the subsidiary companies' sales as a one sales, all the companies' financial statement, fixed assets as a one asset. What is not? As a one fixed asset, combining all the asset, adding all the asset. While combining, I have to check consistency of the accounting policies. I have to make necessary changes for presenting true and fair view, because each company will follow different accounting policies, accounting principles. I have to rechange the figures for the purpose of presentation purpose. That is audit of consolidated financial statement. Parent company is holding company. In the name of parent company only I will prepare this consolidated financial statement. This parent company includes many type of subsidiary, joint venture. Then what else? So like this we have to think and write the point. Like this we have to think the point. Okay. So what is the thing? Parent company, holding company has the following responsibility. What is the responsibility of holding company? First point, identifying components. Component means identifying subsidiaries. That is components. How many components? Okay. Point number B, identifying reportable segments for segment reporting. Reportable segment on a holding on the basis of Tata Group will different from each company because their business is different from this business. Okay. Holding company means holding shares in different companies that more than 51%, then it is a holding company. Then how to calculate the minority interest, that is also as an auditor I have to think whether they presented the minority interest properly or not, whether they invested for short term profit or whether it is for long term investment, that also as an auditor I have to think. Okay. Like this, identifying related parties, we already discussed AS 18. So objective of audit of CFS, that's what I am going to read. To satisfy the CFS has been prepared as per the requirement of Ind AS 27, 18 and 31. As an auditor, I have to ensure that CFS is prepared by considering accounting principles, accounting policy, accounting standard also. Okay, so that is the thing. And the next one is features of CFS. CFS are prepared using the separate financial statement of parent, subsidiaries, associate, joint venture and also other financial information which may not be covered by the separate financial statement of this entity. As I said, CFS means it is a combination of different companies' financial statement. I have to add all the asset, add liability, add all the sales, add all the purchase, and I have to present as a one figure, that is consolidated figure. While consolidating this figure, I have to realign the figure due to application and uniformity to bring the uniformity in the accounts of the different companies prepared in a different manner. I have to bring the uniformity for the differences. How to bring the uniformity? Then I have to give some additional treatment on the accounts on the CFS. Okay, we need not to think much about CFS. Okay, try to visualize the discussion made by me, and related point is given. SA 600, I am reading the page number what is the page number? 63. In 63, second para is basically one mark purpose. What is that? The auditor of financial statement of component as required under section. The auditor of the CFS has to use the work of other auditor. If I am using the work of other auditor, then that is called SA 600. Please remember. How to verification procedure. Based on our discussion, you please go through these points. Verification, whatever I said, based on that discussion, you please go through all these points. You will remember. You will able to visualize. Actually, you will able to understand definitely. Come to the next page 64. Come to next topic, that is audit certificate. What is audit certificate? What is audit certificate? What is the difference between audit report and audit certificate? Audit report is basically opinion on the financial statement prepared by the company. But what about audit certificate? Certificate means what? Certificate means I am ensuring the correctness, accuracy given in the certificate. I am giving guarantee or something, I am giving an assurance on the data, assurance on the figures, assurance on the information given in the certificate. But in case of opinion, I am not giving any assurance. Reasonable assurance on the collected evidence, I am giving the opinion on the financial statement. But in case of certificate, I am giving some arithmetical accuracy. I am giving certificate on the arithmetical accuracy. There is no error. There is no possibility of error on this. area. That is the difference between audit report and audit certificate. Certificate means I am saying that everything is correct and true, and arithmetical accuracy is also correct. There is no possibility of error. That is certificate. But report is opinion. Opinion may or may not, due to test basis, due to audit is based on sample basis. Correct? Inherent limitation will be there. But in case of certificate, that accuracy, there will not be any error. That is the difference between report and certificate. Based on the information and explanation given by the company, I am giving the certificate. The accuracy, the rate of interest applied in the company, interest calculated by the company, got it or not? I have to quantify the amount, and I have to write how I verified the amount. More assurance, more reliance in case of certificate, because it is certificate. Okay, will go through the theory here. Audit certificate, under that I am reading. Sometimes apart from an audit report for general use, an auditor is often called upon to give a certificate for special purpose. The certificate should include the following. Auditor should see there is a suitable declaration by the management about the subject matter. Auditor should give the certificate on his letterhead or statutory carrying his name and address to avoid misunderstanding. Auditor should clearly, next page I am reading, 65. Auditor should clearly state his limitation and indicate the extent to which he has relied upon a technical aspect, if any. In certificate also, auditor has to mention limitation aspect also. If there is an error, what type of error, he is not responsible. That also he has to mention. Second, next auditor should indicate the specific record covered by the certificate. How you verified the certificate? How you are issuing the certificate? On what basis you are issuing the certificate? What is the record you are having for this purpose? Which record you verified by issuing this certificate? For purpose of this issuing certificate, which record you verified? How you verified? What about the authenticity of the document? All those things auditor has to mention in the certificate. Next, third bullet point. Auditor should mention the manner in which the audit was conducted. How he conducted the audit. Fourth point. Audit should indicate the certificate he has made certain fundamental assumptions. Audit should make a reference to the information and explanation obtained. Audit should give a clear title to indicate whether it is a report or a certificate. Next bullet point. Auditor should mention that vendor he has used a general purpose statement like P&L for his investing, and also state whether the general purpose statement has been audited by the other auditors. What data he collected for the preparation of certificate? Which one is an audited data? He has taken the financial statement for issuing the certificate, whether the financial statement is audited by him or some other auditor, that also he has to mention. Based on the statutory audit report, I am giving the certificate, means statutory audit is audited by someone else. This auditor will give certificate for one area. Normally banker will ask certificate from the client actually. Banker will ask certificate from the client. For example, receivable certificate. Receivable certificates. For example, they have taken the working capital loan from the bank. Client is taken loan from the bank, working capital loan, by pledging their stock and receivables. By pledging their stock and receivable. So banker will say, you are saying you have receivables of 1 crore. Based on the receivables, we are giving the loan to you. I want to ensure that you are having 1 crore in your books of accounts. Get me the auditor certificate on the receivable part. As an auditor, I will check the receivables, whether 1 crore receivable is available in this company or not. I will check all the invoices, sales invoices. I will check all the accounting entries. If it is there, then I will give it is there for 1 crore. Or if it is less than 1 crore, whatever the amount is there, then I will give that amount as certificate. That is certificate. That is the difference between audit report and certificate. Okay. Here the reliance and trust for the document is more compared to report, because report is opinion, here it is certificate. That is the difference. So this is the explanation for audit certificate. You come to page number 66. Please go through yourself all other points. Don't leave it anything. Okay. For the time, for the matter of time, for the I want to complete the topic, so that I am leaving. I am giving an explanation and try to leave wherever not required. Actually, wherever not required, rather I am believing that you should be able to study yourself. Based on my explanation, you should have a capacity, you should develop a capacity to study the balance point which I am not discussed. Okay, my objective is to explain the meaning and the concept. Based on that, if any 2 points is missed out, you please study yourself, don't leave that point also. Okay, so what is the next page? Next page is 66. Certificate, sample certificate is given. Sample certificate is given, you just go through. Sometimes they will ask one they will ask you to write one certificate also. So I am reading one certificate sample. First certificate I am reading. We certify that the best of our knowledge and according to the information explanation given to us and shown by the records examined by us, the figures of deposit and interest rate and part A, B and C of the return are so and so of the amount of the company are correct. I am saying correct. Deposit calculated by this company is correct. Interest rate calculated by this company is correct, because I verified the books of accounts. Each and every item I verified. I calculated myself. Rate of interest is 10%. They applied 10% only. Total deposit is 1 crore. They are showing only 1 crore. Hence correct. Like that I have to give certificate. Okay. Come to the next page. Page number 67. Difference between audit report and audit certificate. Whatever I say, based on that only the difference. Okay, I am just reading the meaning difference. First point, audit report is a statement of collected and considered information so as to give a clear picture of the state of affairs business to person who are not in the possession of full facts. Audit report, I am giving an opinion on the financial statement. That's what they are trying to say. State of affairs, but I am not aware about full fact. I am not verifying 100%. It's a sample based audit. Sample based, test based audit only I am doing. Based on that I am giving a report. That is audit report. But in case of certificate, it is a confirmation I am giving. Accuracy, amount, rate of interest, everything is correct I am saying. That is the difference between audit report and audit certificate. Next point, opinion. Audit report is basically opinion, but audit certificate is not opinion. It is assurance. I am confirming the accuracy of the figures. There is no opinion. Opinion means may or may not happen, may or may not correct. But in case of certificate, I am ensuring the figures. That is the difference. Okay, like this you go through the all other points. Okay, all other points you go through, important for examination. Self-examination question. Come to the self-examination question. As of now, true or false? SA 700 is for what? True or false? First, 700 stands for forming an opinion reporting a financial statement. True. It is, we studied above actually. You go and refer. Then what about next one? Audit report reflects the work done by the employee or auditor? Auditor. False it is. Third point. Audit report is addressed to the authority appointing the auditor. Yes, of course. Who is appointed? Shareholder is appointed the auditor. We have to report to them only, shareholders. True. Auditor gives a clean report when it does not have a significant reserve in respect of matter contained in the financial statement. True. Qualified report, clean report, plain report, unqualified report, clean report, plain report, all are same meaning. It does not have any significant reservation. Opinion, everything is true and fair view. So, true only. What is the next one? Disclaimer of opinion issued when I cannot form an overall opinion about the matters contained in the financial statement. True. I am not able to form an opinion. That is disclaimer of opinion, because document is not available for audit. Okay. True only. Piecemeal opinion is issued when whole of the matter contained in the financial statement is true and fair. No. Partly only. Partly is true. Partly I am not able to audit. Partly is true means piecemeal opinion. This area, out of 100 area, 80 areas I am giving true and fair opinion. Balance 1 area I am not able to give, because document is not available. So it is false. 6th is false. An adverse report. Next page 69. An adverse report given when the auditor concludes that based on his examination he does not agree with the affirmation made in the financial report. True. He is not on overall basis affirmation made on the financial statement is not agreed at all. So true. What is the next one? CARO 2000 is applicable to banking company. It is not applicable to banking company. False. It is not applicable to banking company, insurance, small company, 1% company, section 8 company. Then what? Private company having a paid up capital of 1 crore, loan borrowings 1 crore, less than 1 crore, less than 1 crore, then also turnover less than 10 crore. For this type of company, CARO 2016 is not applicable. Come to the fill in the blanks. Violation of section 143 imply a fine of how much? It is how much? 1 lakh rupees. Please refer. It is mentioned as 1 lakh rupees. Point number 2. A report is a statement of collected and considered facts. Please remember for examination purpose. Third point. The audit report shall either contain as what? Opinion on the financial statement. Correct? Expression of opinion of the financial statement. Fourth. The audit report is meant for the shareholders of the company. They are our addressee actually. For them only we are addressing. Fifth, audit report reflects the work done by the auditor. Okay, audit report should be signed in the personal name of the auditor. Who is signing? In his name only it should be auditor. Name should be mentioned. Okay, match the following. True and fair audit report. True and fair audit report means unqualified opinion. Everything is correct. Audit report with certain reservation, qualified report. Everything is correct, but subject to above. Subject to particular area, everything is correct. That is qualified report. Answer is qualified report. SA 700. SA 700 is forming an opinion and reporting of financial statement. Fourth, negative report. Negative report is when I will give negative report, I does not agree with the affirmation made by the management in the books. Point number I. That is the answer. Fine for violation 1 lakh rupees. Just now we studied. SA 600. What is SA 600? Using the work of another auditor. We studied above. Okay. Specifically I mentioned using of another auditor, branch auditor. Then I have to follow the SA 600. 7 is what? Expression of opinion on financial statement. Expression of opinion on financial statement. Audit report only I will express the opinion on the financial statement. Point number 8, disclaimer of opinion. If I am not able to form an opinion, then it is a disclaimer of opinion. Point number 9, scope paragraph. Scope paragraph. I think there is an error in scope paragraph. Something they mentioned as 4 times, which is not correct. Okay. Scope paragraph. Answer is not correct. Answer is not given clearly. Okay. D is not available. That's why. D is not available. F they have given F 4 times. That is not correct. I am going to choose the correct answer. Meeting of audit committee should be how many in a dash in a years? 4 times in a years actually. 4 times they have to meet. Okay. Previous class you remember audit committee section. In that audit committee we discussed whom it is audit committee is applicable. Public company and listed company only audit committee is applicable. There we studied about this meeting. Okay. Second point, audit committee should have how many directors? 3 minimum directors. Out of 3, 2 should be in a independent director. So 3 minimum directors. Again A, 3 is the answer. The dash shall act as the secretary of the audit committee. Company secretary. If company secretary is available, then company secretary will act as a secretary of the audit committee. That is general knowledge. What is the next one? Point number 4. A nomination remuneration committee should have how many directors? For them also it is 3 only. Whether it is an audit committee or nomination remuneration committee. Nomination remuneration committee means there is a separate committee where they will nominate the directors and they will fix the remuneration for directors also. For that there is a separate committee. That committee is how many minimum member is 3. Okay. Fifth point is an audit report is the final product or opening product. Final product or opening product. It's a final product. It is not a main product. It is a final product. So answer is B. So with this your 7.3 is over. You can expect around 8 to 10 marks from the 7.3. Next topic is 7.4 miscellaneous audit. That is also important actually. All the 4 areas in this topic is important. So in next class we will discuss the 7.4. Okay. Thank you.